Market. I'm joined now by Tiscareno. She's an energy analyst at S&P Equity Research. Christine, good morning. Thanks very much for joining us today. There's been all sorts of forecasts for the price of oil in recent days and weeks, hasn't there? I mean, some of them, do they seem a bit pie in the sky? I mean, $150, $200? What are your thoughts?
I mean, you can pick your number according to the scenario that you come up with. Realistically, in terms of physical terms in oil, there is plenty of oil to go around. We can really live without Libya if situations were to worsen and the country, let's say Gaddafi bombs the installations in the country. We can't live without Libya. The OPEC supply that they have, it's plentiful. I think it's more the psychological impact and the fear. At the moment, you have about $10 a barrel in risk from MENA countries because they produce 40% of the world's supply.
That's the fear premium, as some are calling it.
Exactly. And we think that going forward, you might have that in oil prices. They have stepped up, so to speak, because we realize that it isn't as secure as we once used to think. But the country to watch is Algeria, because a lot of the new production is coming from Algeria. Now, Libya has always been a basket case, and it's a special situation because Gaddafi, knowing that this could happen one day, did not have a military. So you can't have that more peaceful transition that you've had, like we've seen in Tunisia and Egypt. Now, Algeria does have a military, so we don't think that it can explode. As long as nothing happens and everything continues as is, we see, for example, in the futures curve, that oil does spike, but then it comes down to about 100.
It's interesting you mentioned Algeria. What about Saudi Arabia? Because that's the big worry, isn't it?
That's right. Well, Saudi Arabia, they're going to have a day of rage this Friday, and they have another one coming up on March, I think, the 17th. That should be watched. But even though people worry because of what's happening in Bahrain, they say, well, it's like a mirror image, just in big. You do have to remember that Saudi Arabia has a lot more control. It will be a lot more difficult to carry out. So at the moment, I'm not worried. I'm rather optimistic as to what's happening in the region, and I think it's correcting a lot of problems in the market. You know, the problem, for example, is North African importance to Europe is natural gas, and we have a bubble in natural gas. So this will help to correct that imbalance. And yes, we do have a premium, we have a spike, and the problem is that if it goes on, it has a psychological impact that can derail the economy. They say a 10% increase in the price of oil can eat up growth in the economy about 0.2 to 0.5%, and also can add about 2% in terms of inflation.
What level for crude oil do we really have to start getting worried when we're talking about the global economy? Is it around 120?
I think even as 100, if it goes on for about 6 months. Just the psychological impact, because what happens is that you will start, it's like a tax, because you will start consuming less because you have to fill up your petrol tank. So you might not be eating the chocolate bar, you might not be buying the magazine, so you decrease your consumption in other items in order to be able to transport yourself. So it's a psychological impact. You say, well, I need to earn more. And that's the danger, that it becomes a reality, even though it isn't.
Christine, talk to me about the spread. It's been oft talked about lately between WTI and Brent crude. I mean, it was $19. It's come down to about $9 now. I mean, is there money to be made out of this or not?
Well, Brent and WTI have a very special relationship. Historically, WTI trades above Brent because it's of a higher quality. And I can explain to you the differences. But just very briefly, what happens is that because we've had a lot of inventory in the US and a pipeline that hasn't been finished in terms of its construction, we've had a lot of oil that has nowhere to go. And therefore, you see now Brent trading above. It's also more sensitive because a lot of the African crudes are indexed against Brent. So you've had that relationship inversed. Now, what happens is that traders see that as an opportunity, and what they do is they sell the spread. They buy WTI and they sell Brent. And what they hope to do is that after a while, when the relationship returns to normal, then they close the spread and they make money. Now, if this spread doesn't turn around, you have a lot of people coming in, extending that, and you have a lot of paper barrels up in limbo that do not get back into the market. So at the moment, those people are losing money, so they don't want to close the relationship. So it becomes a self-fulfilling prophecy, and it just gets carried on.
Christine, got to leave it there, but thank you very much for that. Christine Tiscareno there. She's an energy analyst at Standard & Poor's Equity Research.